Many families love to schedule that end of summer vacation right before the kids have to head back to school. It acts as a sort of end of summer hurrah before we head into the more typically slowly paced fall months. Interestingly, this year, Irvine's housing market was on a very similar pattern, as we saw a late summer boost in sales this August. The question though, was this just a seasonal spike, or is Irvine's housing market gearing up for a busier back half of the year? Starting with total sales, we saw 72 detached single-family homes closed in August, a 16% jump from the 62 sales in July. That also makes August the second busiest month of 2025 so far, just behind April's 74 closed sales. And this late summer boost in sales is not typical for Irvine's market, especially in more recent years. So, what caused this big jump in sales? It traces back to that surge in demand we saw in July as pending sales increased up to 67 homes. Last month, I covered those key factors behind that surge in demand, and it is those same factors driving this increased sales we saw in August. First is mortgage rates. Since peaking at 7.08% in May, the 30-year fixed rate has been on a steady downward trend, finishing August at 6.50%. And that half-point drop in rates has given buyers just a little bit more buying power on the lending side, but has also instilled more confidence in them that the market is strengthening. That added confidence wasn't just coming from lower rates. The S&P 500, Dow Jones, NASDAQ, and most financial markets all had a strong August and continue to trade near all-time highs. We also got a hint from the Fed that a rate cut may be coming at their September meeting. That signal triggered late July and early August drop in mortgage rates and fueled another rally in the stock market, pushing major indexes even closer to record territory. That increase in demand and an overall healthier financial outlook was not enough to get more sellers on the market. In fact, we saw new listings as well as total supply in Irvine continue to slip in August. And this shouldn't come as a total surprise, as it is quite typical for this time of the year, as many sellers pull their homes off the market after missing their summer goals. Despite tighter supply levels and that increase in demand, the average price per square foot for a detached single-family home in Irvine decreased for the fifth straight month, dipping to $923 in August. However, it is not quite time to sound the alarms, as this trend mirrors what we saw around the same time last year, so it is not entirely unexpected. Looking ahead, all eyes are on the Fed's September 16th meeting. A quarter-point rate deduction is likely, as well as hopefully some more info on the Fed's future rate policy. If the Fed does deliver positive news, we will likely see buyer demand increase, as many buyers also look to move quicker to take advantage of today's buyer-friendly conditions. As if rates do fall, we should likely see the market shift in favor of the sellers once again. So, what do you think? Will we see Irvine's housing market finish 2025 on the upswing, or will demand and home prices continue to decrease through the back half of the year? Let me know in the comments below, and if I don't hear from you, I would appreciate if you click that subscribe button, and I look forward to getting to bring you the next Irvine housing market update. Cheers.